Hello and welcome to this edition of Tax Planning Tips. Yes, this is Black Pops TV and my name is Noni Nwasike. I am a certified public accountant. I actually do taxes for a living. I love taxes, right? So what I want to talk about this week, it's about 2016 tax saving planning. The goal is for us to pay the minimum taxes to Uncle Sam year after year. And if you know anything about me, I would have told you to start planning at the beginning of the year, because then you have a full year to do your plan. That's it. We have about 20 days to the end of the year. So we still have some time to do the last minute tax planning that can save and reduce taxes. Again, remember our goal is to pay Uncle Sam the minimum legal tax. So here are the three things that I want to talk about. They are mostly for individuals, and I will touch on a few things that businesses should start doing before the year ends. Some tax planning businesses can take on till 2017 and beyond. So for individuals, there are three things. This is the season of giving. So my first topic is on gifting. Merry Christmas. The IRS rule allows you to give up to $14,000 a year for 2016 to any individual. So think about your relatives. Think about your children, your grandchildren, your friends. You can give each one of them $14,000 tax-free. And if you have a wife, and if your wife joins you in doing this gifting, then you're both jointly giving somebody $28,000 tax-free. Think of it as tax planning for you, as estate tax planning, as succession planning, as transferring wealth to the next generation, the intergenerational wealth. This is one tool you can use for that as well. So that's gifting. The second one is charitable giving. When you have to give to a cause, give to a non-profit, make sure whoever you're giving to is a 501c, it's a tax-exempt organization under IRS. You can just do the check. Now, if you want to give, I do run a non-profit organization called Black Pumps, so you can also give to us. But you can notice that there's a smile on my face when I talk about it. The reason is for you to be able to benefit from this charitable deduction for this year. You have to be able to itemize your deduction. You have to file the famous Schedule A, which means if you're a single person, you should have itemized deduction in excess of $6,300 for 2016. If you're head of household, I believe it's $9,300. Married filing jointly, it's about $12,600. Don't quote me on it, but I think those are the numbers. Okay, tax is very taxing, so once you get that, you can then take your deduction. You can use that charitable giving to reduce your taxes. You can also carry over your charitable giving. So it's a good thing for you to give. IRS encourages you to give. Okay? So that's one thing that you can do. You can do this even the last minute by 11:59 p.m. You can write that check. The last but not the least is the tax-deferred contributions. Your 401k, your 403b, your SEP IRAs, your simple IRAs, all of those. They're tax deferred. Especially if you're an employee, make sure you're maxing out on your 401k. Remember, your employer is matching that amount, and you don't want to leave any money on the table. And some people will say, why do I have to give to 401k? Remember, when you retire, your tax rate is going to be lower. So you'll be paying taxes when you actually pull that money out. So that's why it's a very good vehicle for reducing your tax liability. So remember we said we have to touch on about 1 or 2 things for businesses. I actually specialize in corporate taxes. So one big thing for me this year, you've heard about it every year. It's like one of those things they say, buy low, sell high. Okay, but in tax we say accelerate deduction and defer income. What does that mean? That means making sure that you push all your deductions to this year, or accelerating them, making them come faster, and deferring your income. This is especially very good advice for this year. It doesn't matter who you voted for, whether you voted for Trump or you voted for Hillary. Come January 2017, Donald Trump is going to be our president. That's a given. And you know what he promised? He talked about the tax reform, reducing business tax rate. So there's going to be a tax reform in somewhere in 2017 or beyond. So this is the time for you to start planning to defer the income, because if you're a corporation, if you're a business and you're in a 34% or 35% tax bracket, guess what? After the reform, you might be in a 15% tax bracket. That's why it's good for you to defer the income. And then accelerate your deduction, because there's also potential limitation on business deductions with the tax reform. So try and plan, talk to your accountants and plan and make sure that you're accelerating your deductions. One other thing that you ought to be making sure that you're doing, it's, if you remember in 2015, Congress actually extended the bonus depreciation. So make sure you're maximizing on those. And then there is the tangible property regulations about the repair regs. Make sure that your fixed asset that you purchased this year, that you're assessing them, you're looking at them and making sure if they qualify as repairs or if they even qualify as the de minimis exception. Congress actually increased the de minimis amount from 500 to 2,500 if you don't have a financial statement. So it's all good this year. And this you can do after year end because you already spent the money. So make sure you're hiring an accountant, a tax accountant, a certified public accountant if you can. You can inbox me, email me if you don't have one. And if you have any questions, inbox me and I'll help you sort it out. I can either refer you to someone or maybe help you look at what someone has done for you. So that's all I have for 2016. You have 20 days to put all these things into practice.